Hello, once again, I'm Kevin Turner from Real Estate Talk, and it's my pleasure this time to introduce you to another person who's been featured in the latest edition of Australian Property Investor magazine, and that's Haines, who has been on a very interesting journey over the last 2.5 years, amassing 9 investment properties, which we'll talk about. But firstly, let's say hello to Di. How are you, Di?
Hi, Kevin.
Thank you for joining us today, and I'm so looking forward to talking to you about this journey that you've been on. And you're going to give us your 5 top tips as well. We'll talk about those in a moment. But firstly, tell me that story about how you found your first property.
Oh, yes, that story. I was driving to work and I wasn't really seriously thinking about property. So I didn't have any, immediate plans, but I was just driving past. I saw this house for sale, just an older sort of house. And I drove past and I don't know, I can't explain it. Something came into my head and I just thought I need to do something.
Yes.
I have to start. I've got to do something. I've always sort of had it in the back of the mind with our owner-occupied property that we'd probably get by with retirement.
Yes.
But because we can do some stuff with that as well. But I thought, no, that's not going to suffice. I didn't have hardly any super behind me, and I just wanted to try and get on an even keel with my partner because he
Yes.
has his own self-managed super fund.
Yes.
So I thought, well, I understand property. I've bought lots of property over the years. That's something I can do. I don't like shares. I don't like anything else.
Yeah.
I understand property.
Well,
So
it was a great inspirational moment for you, wasn't it? Because I mean, since then you've amassed $2.8 million worth of property, and I think you've got equity in there of just a touch over $1 million, if the spreadsheet I'm looking at is correct.
that's correct. That includes the owner occupied. The
Yes.
investment properties only. I've gained 381,000.
Yes, it's a
Yeah.
it's a great start, and that story that I love too is that sort of leads me into your first tip, which I guess is a bit of self-advice about if you want to do it, just get on and do it. That's probably a great message to give people, isn't it?
Oh, definitely. You speak to a lot of people and they talk to me about what I've done and, oh, we'd like to get into property. And you speak to a lot of people that just talk about it, but never take the step for
Yeah.
whatever reason that is. Maybe they just haven't got the confidence or they're just not that way inclined. But, that's with anything, not just property. People talk about things, but if you want to actually get ahead, you've got to move on and actually do it.
Well, you've now got 9 properties. Was there at any point when it became difficult? Like, was the hardest one the first one, the second one, or the third one?
Not really. No, I wouldn't say anything's been difficult, except for in the beginning.
Yes.
I was self-employed, so getting the loans for the first few was always a challenge with the banks.
Yes.
But then, midstream, I've actually converted, to be a normal employee, if you can say normal,
Yeah.
and it's made it easier. But never once has it been an issue. I've never thought, oh, gee, should I be doing this? I've never hesitated. It's been, I think we bought cheap properties. I don't buy high end of the market. And that's what I was saying to Kieran from API. I can sleep at night because the properties I've bought, I know I can handle the repayments. I know I will make money on them. I haven't outlaid a lot of money to get where I am. I've actually, got capital growth and everything out of it.
I want to talk to you about your strategy in just a moment. Before I do, I think one of the interesting lessons is, and you probably just touched on a little bit there, is your second tip about how you treat your investment as a business, which is, I guess, a mistake a lot of us make along the way too, Di.
Oh, definitely. You can't get emotional about the houses. They're there for a reason. They're there to make you money at the end of the day. So you pick a house not because it's a pretty colour or it's got this or it's got that you would like to live in. You pick a house that's going to make you the money. You see the potential. You can add a bedroom. You can add a bathroom without too much fuss. You don't have to build on these sorts of things. You can add a granny flat. You can, that's the potential in the house you've got to see, like a business, not
Yeah.
an emotional decision.
Yeah. Tip number 3, you say create your own strategy. Let's talk about that. How did you develop it, and what is your strategy?
Okay. Well, presently, and it has always been for so far, is to buy the cheaper end of the market because I'm comfortable with that,
Yes.
to renovate them. And I'm lucky because I have a wonderful partner that assists me along the way. So I'm very lucky by having him, and get the equity gain, get the higher rent.
Yes.
And at the moment I've kept them all. I haven't sold anything at this stage. Probably I could change strategies down the track, but I've stuck to that, and I always look for something I can improve on.
Yeah, well, speaking about that, there are two properties in your portfolio. One in particular I notice has a twist, and that is it already has a granny flat. And the most recent one, if I'm correct, that you purchased has the potential for that. Is that something you look for in your properties, Di?
Definitely. If it has extra space on the land, I like a lot of space when you have a granny flat. I don't like to jam them in, because I think you'll get a better rent and both tenants will be happier if they've got their own space. So, and the Woodridge property was perfect because they're virtually side by side. And if looking from the street, they look like they're just two separate blocks, but they're not. So, and the Bellbird one is a great, I think it's 1,012 square metre block with rear access. So again, can be fenced between them, have their own space. Everyone will be happy, and I'll achieve a better rent at the end of the day.
Yeah. Tip number 4, a really good one too, and that is don't give up if you encounter problems. Have there been many problems you've encountered that have wanted you to give up, that you've pushed through?
No, I don't ever give up. That's the thing. The only problem, the problems that I may have encountered would be with finance and dealing with the banks, because they don't see things the way you see it, obviously.
That's right.
I see potential in things. They don't look at it that way.
Yep.
I've had a couple of struggles to get the finance through, but I knew that I could do it eventually. I've got some, I was a mortgage broker many years ago, so I understand finance game, and it gives me a bit of a heads up.
Yes.
But no, I just wasn't going to give in, and I haven't not got a deal through yet.
Yeah. The final tip that you give, tip number 5, is about being a sponge, absorbing as much information as you can. You never really stop learning, Di, do you?
No, never stop learning. In fact, I've booked in for a seminar, 3-day seminar at the end of July, because no matter where you go, I always have the idea that if you can just pick up one idea, something that'll help you along the way, it's worth going to.
Yeah.
So definitely keep looking, keep learning.
Well, Di, you're an inspiration. Thank you for spending some time with us. It's been great talking to you, and it's a really good read too, written by Kieran Clare in the latest edition of Australian Property Investor magazine. It's called Never Say Die, and that's the person we're talking to, Di Haines. Di, thank you for your time.
Thank you very much, Kevin. My pleasure.